crypto. All right, so anyways, 3, 2, 1, let's go. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, night. Hey, my name is Wayne McDonald. It's really nice to meet you. I'm a currency trader. Oh, you too? Cool. Well, let's spend the next hour together going through the charts. We'll do technical analysis. We'll look at gold. We'll look at oil. We'll look at dollar pairs, we'll look at yen pairs, we'll look at Swissy pairs, we'll look at exotic pairs, we can do some crosses maybe. Anything you want, man, but here's how you pay it back. The sponsor of today's webinar is tradersway.com, so visit tradersway.com, open up a demo account, download MT4, give them an opportunity to earn your loyalty and respect. Not only are they making these webinars available to you every day, but check out their execution speed on their platform. It's super fast. Check out the spreads. Very, very competitive. If you don't like spreads at all, open an ECN account. If you want a fixed spread for scalping, you can get that as well. I prefer variable spread, so I go with the VAR. What else? Oh, the swaps. I'm going to show you. The swaps are amazing. Amazing. Tradersway.com. Pay it back, eh? Let's go. What do you see here? WTI. That's some oil. This is in our buy zone that we discussed a couple of days ago. So good morning, get ready, because this ain't funny, right? We're right on our zone if you're a bull looking for a flip. One more bounce, maybe a higher high, higher low, gone. What's up, Gareth? The great white shark of Forex. Okay, so just keep an eye on that. We're definitely at support. You can't sell, but maybe, just maybe, on a smaller time frame, you're going to look for a reversal pattern if you are a buyer. Okay, doesn't mean you have to be a buyer. It just means if you are already a buyer. Hey, it's pretty simple. Your opinion is gold is going to go up or it's going to go down. It's not that complicated. Okay, did I say gold? I meant oil, but you know what I'm talking about. All right, so where are we here in the world of Swissy? World of Swissy. Okay, we got one sell up here somewhere, and we got one sell here. Looking good so far. So in the sort of the micro view of this 1 hour chart, we had a down, 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 up, up, sell. And then we had a more macro move of down, 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 up, up, sell. And prices down here. Cool, right? So that's starting to work. By the way, whoop, by the way, and I don't know how this is going to work. I found a new tool, and I'm going to put it on MetaTraders. But now thinking, I got 2 trades on here, so I'm not sure how it's going to work. But indicators, custom, and what the heck is it called? Show pips. And I turned it on. I like this to be green because that's me. So let's just do that. Why not? Green. Boom. Okay. And it says I have 142 pips. And then I can change it. And I'm not sure what all these things are. But I have 142 pips and a 0.5% relative to my entire account size. I've made a 0.5% profit already. Cool. I don't know what this other stuff is. I think there's a spread in here. And see, I can filter through this information, and I can get it down so it only shows. So right now, I think what it was showing was I'm up 142 pips, and it's 2.2 pips to get in. And then there it is, 140, right? So it's interesting. It's adding them up. But the thing is, which one is it? Is it doing both? So it's a new indicator to me. So let's try to add this up. So from here to here, is 100 pips. Yeah, so I guess that's about right. That's cool. And then so from here to here is just less than 50. Yeah, so that's what it's done. It's added both trades, and I have a total of 142 pips. Yeah, that's cool, right? So I'll put that on MetaTraders. I guess I should try to figure out what that other stuff is. Okay. Okay. But cool, right? So anyways, based on the technical analysis, check this out. Right? Top, 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 top. That's what we're looking at, right? Bottom, 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 and now bottom. So now you're probably lower, high, lower, low, which is good. Now, our massive test is, I hate to be Captain Obvious, but it is my job to be here and do this stuff. We gotta get through this first, right? Well, again, this isn't a technical trade. This is a fundamental trade. So I kind of have to be careful. But the obvious, the obvious target here is, in the middle of 63.80, 63.50 maybe. Okay. All right. Remember, targets are always easy. Targets are always easy. Right? Here's the monthly target. And here's next week's target. Now, I could get out here based on this week's target, but I'm going to try to supersede it. Otherwise, I would have gotten out yesterday, right? Cool. Next, Beast. Let's do the Beast. This says I have 93 pips profit left on this one. Okay, that's kind of a neat thing, right? And so now right? Delete this out. So in here, I'm expecting this, and this next week, okay? But we're not quite there yet. Yeah, oh, Captain, my Captain, yeah. Okay. But Mr. High Volt, like, what's the weekly or monthly? That's your call. It's your call. But that should be easy based on your plan. Your before you took it, you had a plan, right? So, like, look at Beast. What was my plan? I have a down, 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 up, up, sell. What's my plan? Minimum monthly M1. Okay? So my job is to take this down to monthly M1. Okay? Now, you could have different opinions on how to manage this. You might have been okay picking up 100 pips on the Beast. 100 pips is embarrassing on the Beast because you could blink, turn your head and cough and lose 100 pips. Okay? So for me to only take 100 pips on the pound yen, it's like you're running scared. So here's my plan. My plan was to sell here and get out here. So at this point, I'll either break even or my plan will work. Which one do I want? The small win or the big win? I can't lose money. So what's going to show up on my track record? The small win or the big win? Or a break even? Well, nobody cares about the break even. It's like it doesn't even exist. You know what I mean? Stephen Editor says, yeah, he blinked and coughed yesterday and lost his Beast trade. That's what happens. Pachow, pachow, right? So anyways, what was my plan when I took it, right, Mr. High Volt? I'm going to sell there. This is how much money I'm going to make. Or I break even. So, maybe NFP will go my way. If it doesn't go my way, I don't lose money. I give myself opportunities. This is what I'm looking for, guys. I'm trying to give myself opportunities. Okay, This is a kitty cat something. I don't know why that's up there. Let's change the template and it should go back. Oh, it's up there for some reason. Oh, all right. So what if I do template the other way? Template bearish. Yeah, that's better. And then I go template bullish. Template bullish. Huh, puts it up there. Whale oil B. I can fix this. I have to go back. Template bearish. Moves this back. And then I can go to indicators. I can go to biased pivots. And I can go bullish mode. And it replaces that with that. Now I can go to file. Oh, it's a template. I can go to template, save template, call it biased. Oh, day trading bullish. And I already have one, so it says confirm that you're going to update it. Yes, I am. And there we go. All right. So this is one that I didn't short because I was so bullish on oil. I'm glad I made that decision, eh, Brew? So that's that. And I don't know how we're going to grab this if you're going to be a bull on this. But we're on tomorrow's buy zone. You see this? This is actually what the template is telling you. If you were a bull, you might want to think about it now, but it's so elevated and not off of yesterday's. So that makes me cautious. We'll look at the bottom of this range and see if that is logical support. And I say, oh yeah, so maybe closer to, 83.70 might be a buy-z on this. Depends on how bullish you are. Okay. Euro dollar. Got to go to a smaller time frame here. Let's go to a 15. And just a bunch of gobbledygoo. So we outlined this level here as obvious support yesterday, even though it fell like a ton of bricks with two hammers. And we're stuck here. So we're on sort of the bullish plan B, really. And the bearish one is already in, right? So it's going to be interesting what happens here. Now, weekly bears, let's go through this. A monthly bear was doing something off the charts here, right? A weekly bear was doing this. Okay, and that's kind of why we had that lower entry for the bulls. So there might be what I call an Arctic turtle where some of the traders stretch their neck out to hit this, and then everybody gets out. Okay? Now, if I spoke with you, like I envision doing conferences with you guys one day, like not conferences, more like workshops, right? And I imagine doing a one-on-one interview with you, hanging out by a pool, on the beach in Cape Town. And we just sit down for a half an hour. And I say, okay, what's your outlook for 2020 with the US dollar? And you better have a kick-ass answer. Do you have one? Okay? Stop everything you're doing and work on that. You have until Monday to develop a kick-ass answer. Okay? Stop everything you're doing. You cannot trade successfully if you cannot predict the future. And how many times have I told you, you could be wrong and still be better off? Okay? If you wanted to take the training course that teaches you how to do that, it's too late. I told you yesterday I was going to post the link. I posted the link and I said I was going to take it down in 24 hours. I took it down. But nonetheless, whether you learn it from me, learn it on your own, come just learn from the daily webinars, read someone else's book, take a course online, whatever, man. But you need to do this. Okay? So make sure you sit down with yourself between now and Monday and hash that out. If you can't tell me what to expect for the US dollar in 2020, you're not a professional trader. You couldn't have a reasonable conversation with a person about what you do. So you need to change that is all I'm saying, okay? I'm not trying to ridicule you. I'm trying to wake you up. Okay? Okay? No, I didn't ask you to pop it here. I asked you to just develop your answer on your own. Okay? Cool. So here's what we were thinking. Is anyone going to do this? Okay? No, don't pop it in here, guys. Let other people do their own work. It's one of these things, guys. You take my advice is what I'm hoping. Like, it's not bad advice for a coach to say, sit down, do some analysis, spend several hours doing some analysis, and from that, make a decision on what you're going to do for 2020. Okay? It's not bad advice. And like, imagine you took, 38 college courses in the last 3 years. You'd be very used to this idea, like between now and Monday, you got to bust out a 10-page paper and knock it out while doing your job, while hanging out with your wife and kids, and maybe you have to give up a barbecue or something. But now I'm talking about your career, not about some stupid college paper. Okay? Like, dude, like, what's holding you back? Remember yesterday? I'm like, do you have a ridiculous, sickening work ethic? Yes. Do you have half a brain? Yes. Do you want to be successful? Yes. Will you develop an answer to what do you think the US dollar is going to do by Monday? No, I can't do that. That's too much. Right? No, come on, dude. Get on it. So I'm going to leave it at that. Don't write your answer here. I want everyone to do their own research. Okay? It's not supposed to be easy. I never told you it was going to be easy. Okay? Cool. So anyways, that's one way to play this. The other way to play this, and we discussed it, on Monday, I think in here, you trade it like a fake out. And this was sort of a news-generated thing. And then what you're looking at in the future is this on gold, which means dollar up. Okay? So you'd have to be a dollar bull on that. No, Mr. High Volt, I don't think you need half my brain. I think it's just time. And then really conversation and discussion. Okay? Conversation, discussion. One of the things I found very difficult when I first started out, I guess even to today, I don't really have anyone to talk to. I don't have a mentor. I don't have a leader. I don't have friends that know anything about anything of what I do. Right? The money managers that I know are wealth managers, so they manage grandmother's pearls, and I don't know what they know. They know insurance, and they know annuities. And then you're like, what's the stock market going to do? Oh, well, I think we should diversify. Like, dude, diversify. Great. Nice answer. Okay. But anyways, so in a big way, you're my mentor. Because you force me to do things like make decisions. Well, so I'm asking you to force yourself to make some decisions. Oh, we did this one already. So what do we have now? Let's look at the open trades. So you remember yesterday I had 2,000. So now I have 2,100. So I made another 100 pips since yesterday. And I made 400 pips the day yesterday. So now I'm 500 pips up since Monday. That's cool, right? So what's going on here? Where should we look, eh? Where should we look? Mostly sideways, though. When you start to stack your trades like this, and you only make 100 pips or lose 100 pips, it means hardly anything's happened. You know what I mean? Yen pairs, okay. Yeah, sure, we'll do some yen pairs. Thank you, Baby G. I appreciate your loyalty. Okay, so we've talked about this. This has two things going on here if you're a bear. So as you know, I'm short right here. Okay, and I think that's the only one I'm short. On the medium-term flow, so to speak, we have what I planned. Remember, this was the plan. Down, 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 up, up, sell. I only got a small up, up. You see that? Let me ask you, is there too much going on here? Like, is this confusing? Then let me do this. Let's start with the bigger trade plan. The bigger trade plan, by the way, we did this a week and a half ago. This was the plan. So you should already know what the plan is since we did it a week and a half ago. Okay, but anyways, there's the monthly plan. And then inside of this, what I was looking for is a down, 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 up, up, sell, down, 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 up, sell, down, down, and take profit. Those are the two plans, the monthly and the weekly. Oh, which reminds me, hey guys, today is the swing trading group. We're meeting at 11 a.m. swing.fxbootcamp.com. So sometimes I forget if I did these plans in the daily webinar here or the swing trading group. Now I'm thinking this might have been a swing trading group analysis. But anyways, swing traders, I will see you at 11. Peter DeVry says he's up 250 pips since Monday when you started your demo account. Very good. Congratulations. So let's do this. I want to add this thing. I'm kind of digging it a little bit. It might be just a new toy. And I go 1 and go to a 5-minute chart. So this one's up 130 pips. Oh, not bad. Yeah, we could do Euro Lira. I miss your point, Barry. Barry says, "Is it that time of year to do that, Wayne?" I'm not sure what you're commenting on. I must have missed it. I apologize. All right. So, anyways, there we go. Okay. So we hit some nice weekly targets, and now we're floating around here. Prince Philip says Euro Lira did okay since the last time we saw it. Yeah, well, because of the geopolitical tension residing. So I talked about this yesterday with like, I think it was oil. I reviewed why oil went up and then said, well, now that that's gone, everything has to be repriced. And so we're just kind of back to where we were. Anyways. Swissy stronger than yen. You can see right away. So let's go to the Swissy charts. See how that works? Relative strength. So today, Swissy pairs should be down. CAD Swissy's down. Pound Swissy's down. Do I have a pound Swissy trade on? Huh. Must have hit profit on that one or something. Interesting. All right, so moving sideways, but clearly more down than up currently. You can't sell at support. So if you're a bull, look for a reversal pattern, or if you're a bear, wait for the breakout, pullback, and such. Kiwi Swissy we already did, right? Right? I'm short there and I'm short there, so we already did that. Here's the. Oh yeah, this is this might have been one of the things I did with the swing trading group last week, where I'm like, check this out. Ready? Down, 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 up, up. That's a swing, right? Down, 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 up, up. That's a swing. Down, 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 up, up. That's a swing. Down, 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 up, up. That's a swing. Down, 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 up, up. That's a swing. I'm not joking. Down, 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 down. Oh, that's just slightly a little high for a swing, but down, 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 right? And then we saw this, and I'm like, too much, too much, too much. But check out this week. This is the weekly swing trade I did. Beautiful, right? So there's like 1, 2, 3, 4, 5, 6, 7 out of 8 weeks. Beautiful, perfect textbook swings. And people are like, damn, son, I don't even trade Kiwi Swissy. I'm like, hey, maybe you should. And then the other one I think I did that with was Eurozar. I think I did that last week where I'm like, hey, let me show you one other one. Look at this Eurozar over the last 6 months. And then I dropped the mic. I'm like, boom, that's how you do it, bro. People are like, shoot, I've been trading Euro dollar all day. Yeah, well. So anyways. Oh, I forgot I did this one. Oh, shoot. Oh, I did this one. I forgot about it. Look, I didn't put a stop. Woo-hoo-hoo. Woo-hoo-hoo. Ooh, bad trader, bad coach. Anyways, let's get back in. How do you get back in on a move? So we had the down, 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 up, up. Let me try to re-engineer this. Must have been an hour or a 4 hour. I guess it's a 4 hour chart. Now I got to really squeeze back in here. Yeah, all right. So what I did is down, 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 obviously a take profit zone, up, up, into the 4 hour 21. Got this? 4 hour 21. Then when you're sitting at here at 66.70, then you drop into a 5er or a 15, and let's see if we can go find that. I don't remember. I don't remember. Obviously, I don't think I took it on this chart. Where did I take it? I don't remember, actually. That's probably why I don't have a stop on it. Why don't I remember? Was it here before going to bed? Gee whiz, I can't remember. Sorry. Anyways, 4 hour 21. You know what? I must have played it differently then. It's weird that I knew that that was going to be a 21. But anyways, let's look at it a different way since I don't remember. It's weird. I've been getting sleep, but I don't sleep well. Have you ever done that? Where you start to get lots of sleep, but you wake up tired? I'm kind of stuck in there right now. So that's my stop, though. Why did I? So it wasn't this. I'm short here. What? I was short off the 4 hour 21. I can't remember anything else than that. Sorry. Maybe it was a day trade. Hang on. Let's try to figure this out. Maybe it was a day trade. What did I do? What did I do? What did I... Oh, that's all it was. It was just a stupid day trade. Nothing. 4 hour 21 kickoff, the pivot. All right. I'm sorry. Look how textbook that is. Look where I sold the daily M3. Sorry. Well, let's be clear. Too much sleep. I'm getting 7 hours of sleep now. Yeah, I don't think I'm getting REM sleep. But anyways, that's where I'm at. So you can see I did something. Maybe it wasn't a good trade, but it was a logical trade anyways. But look how much I nailed that. So cool. Cool. I mean, I don't know. I'll have to say it's a mediocre trade. So I'm just going to remove the risk and say, you know what, I didn't play it very well. Oh, but that is such a beautiful entry. Okay, see, on this time frame, I can see what I was doing. And then that's what I've done. I took this and then went into my daily and then saw that my daily entry is here. You see what I mean? And I know this purple area is the roll reversal. But anyways. Cool. So that's that. So we did Aussie, Kiwi pound. Let's do exotics. Okay, you tell me, because I'm sure you watched the video I put on YouTube like 3 years ago on how to trade the Mexican peso and why it works. I'm sure everyone has watched that. Okay. When do I sell? Well, yeah. Well, okay. I kind of ruined the question here. I only sell USD Mexican peso. You should already know that. Okay? That's all I do. I only sell it. I can't buy it. It's impossible. Great. When do I sell the US dollar Mexican peso? Huh? Or I could even rephrase it. When have I taught you to look to trade the USD Mexican peso? Okay. Now, I also told you it doesn't work. It doesn't always work, but your job is to always look for the opportunity. Hey, if anyone actually has a link to the video, would you post it? To help out our fellow foreign exchange brothers and sisters. Brothers and sisters! Pip up the volume! Pip up the volume! Dance, dance. Right? Yeah. Repatriation, remittance. Yes. All right. So, check this out. Are you ready? Wait for it. All right. Let me get my handy dandy notebook. Check this out. You ready? First of the month. First of the month. Nope. First of the month. What do you think of that? This was a perfect trade. This was a perfect trade. This was a no trade. This was a perfect trade. And this month it looks like a no trade. Out of 5 months, you got 3 awesome trades and 2 no trades. Like, here's the thing. You ready? Wait for this. There's absolutely not even close, no doubt in the mind that there's no trade there. There's absolutely no doubt, 100% exactly what you're looking for on the exact day a trade. And here we are today. There's 100% no opportunity, never was, not even close, not at all. This is awesome, and this is ridiculously, beautifully, unbelievably, perfectly, must be engineered, awesome. So here's another, so we go back to Daniel saying, and I'm not saying this in a bad way, Daniel. I'm trying to inspire you, right? Daniel said the other day that he only makes 5 to 10 trades a month. And I'm like, well, there's one of them right there, right? Every month you should be looking for this. Why else would I dedicate an entire video? You know, and it's one of these things too, what if you still don't know that? You're like, oh my God, imagine all the things you still don't know, right? Imagine that. I put up a video 3 years ago on that, but I've been doing that for 10 years, right? 120 months, probably, maybe more. 120 opportunities, right? You're not doing that? Why not? Oh, I don't like Mexican peso. Why? Oh, the spread's too high. You don't get it. You don't get it. Because when you look at the value of the Mexican peso and you look at the value of a euro dollar, right? Dollar for dollar, right? So let's just say a US dollar is worth more than a Mexican peso. A euro is worth more than a Mexican peso, right? So this, I'll make a number. Let's say this is 3 pips, and I'll make up a number. Let's say USD MXN, MXN is 30 pips. Okay? And you're like, I could never, ever even consider to even look at a USD Mexican peso because the spread's 30 pips. I'm like, yeah, well, in pesos, right? So these numbers are not correct. I'm just giving an example. But at the end of the day, what if that euro dollar was 3 pips spread was worth $3? And let's say the USD Mexican peso spread of 30 pips was worth $4. Would you really throw away opportunities like this because of the extra dollar? Probably not, right? Well, guys, you should be able to post a link and then it gets blocked and then it tells me it's been blocked and then I should be able to unblock it. But anyways, guys, I just want to open your mind. I hear that a lot too. I could never trade that because it's a 30 pip spread. You don't get it. You don't get it. And that's the issue, right? And that's why I'm here. It's not bad. You just don't have a mentor. I don't have a mentor. But I have 15 years more experience, so I can break this down for you. And by the way, you could probably get my 15 years of experience in 5 years with hanging with me, right? All right, so it looks like it just won't even let you post at all, and for some reason it's not popping up to me, huh? Well, let's see if I can grab out of here. And let me see if I can get it for you guys. You are the one. Yeah, Ed's saying, oh man. I guess because, yeah, I can figure this out. Yeah. So Ed remembers the same sort of thing, right? From a million years ago. It's good that you remember the day you were enlightened. Okay. Okay. How to trade the the peso, I think I put, right? And why it works. Four years ago I did this, and it's only 12 minutes. What I noticed, how about this? What I noticed, what got me thinking about this, is I did study the Mexican peso for a while. So this was something I taught for several years, for free, of course. But I had noticed the peso tended to get strong at certain times. Really? Really? Oh, yeah. Yeah, Javier. Yeah. That's great. No, not black hair. I used to have wonderful chestnut brown hair. All right. So, okay, Czar. So this is the one I did on Monday. So we can throw this down now. Insert, indicators, custom, show pips. And again, I like to make this green. Okay, now. 1,715 pips profit in 3 days. $1,722 pips in 3 days. And it's worth 125 bucks. So really, it's 125 euro dollar pips. This is what I mean by spread and stuff, like a 30 pip spread. Are you kidding? Well, look, I'm up 1,700 pips, and it's only worth 125 bucks. So it's not the pips and the spread and all that. It's the money, right? Okay. Grind Alchemy Gaming says, I haven't lost a peso trade for a while now. I've been trading since March 2017. Hey, congratulations. Well, because it's so obvious, right, Grind? Like, there's either a trade or there isn't a trade. So I look at it this month, like, there's no trade. I'm done. How long did that take me? 4 seconds. Now, if there is a potential trade, now it takes a little longer, right? But anyways, do you guys get the idea here? It's not the pips that matter, so to speak. So I have 1,700 euros, right? But look at this, though. On Monday, I invested $100, right? And I'm up $130. So in 3 days, I'm up 130%. It's not bad, right? I could have showed you this 5 hours ago and I would have been in a significantly better place. Cool. So what I'm looking at now Now, well, we got to be careful. Non-farm payrolls is tomorrow, which often can screw things up. But let me just go through my basic technical analysis as I would any other day. Okay? I want to keep price below this level. If we're above these levels, I'll just walk. I'll walk away. Okay? Cool, right? Any questions? Central banking policy, Daniel. It's all about monetary policy. That's why, like put it this way, Daniel. What are the key economic indicators everyone watches? Jobs report, right? Which we have tomorrow. Inflation, like CPI. Productivity, like GDP. And there's variations of all these things, right? Like you could have CPI, you could have PCE, you could have PPI. Okay. Productivity, you might look at also ISM, for example. And jobs, you can do weekly jobless claims, ADP, NFP, ISM, services, employment subcomponent, right? There's a lot. So you're looking at jobs, you're looking at inflation, you're looking at productivity, you're looking at balance of trade for right, net exports, right? Imports minus exports, right? Net X, all this kind of stuff. Why do you look at all of this stuff? What's relevant about all this economic news flow that comes out month after month after month after month? Who cares? Why does it care? Daniel, you don't need to read a lot of reports. Pick one government, then you're done. Fundamental to what? Like, what does that even mean? Fundamental to what? These are news releases, and they're fundamental, yeah, but fundamental to what? Playing tennis? Writing business plans? No, it's not US dollar. It can't be US, unless you're saying you're going to specialize in US dollar. Tells us if the economy is slowing or growing. Great. Why does that matter? Interest rates adjustments by the central bank. Okay, Edward is on his way. Why does interest rate adjustments matter? You have to ask yourself, how does a central bank do it? How do they adjust interest rates? How, though, Ed? How matters. Who indicates what the Fed might do? Who cares? Like, why? What do they do? What is the one thing all of this leads up to? Think about it. What is it that we trade? It's not buying bonds. Buying bonds is a tool, a mechanism. Buying bonds is an open market operation, an OMO. It's a tool of the Fed, but what does it do? What does it matter? Thank you, Kareem. Money supply. The supply of money. All of that stuff, guys. All of it. PPI, CPI, PCE, NFP, ADP, ISM, all of this stuff just is stuff that the central bank tracks. And then they're like, oh, look at that. We need to adjust the money supply. So they say we are going to buy some bonds, or they say we're going to sell some bonds. But those are just how they adjust the money supply. Okay? And when they're doing that, because the money supply changes, interest rates change. So let's do it this way, maybe. Oh, look at that. Another sell, guys. Whoa. Another sell. Look at that. Anyways, all right, let's do this. Template blank. Okay, let's start here. Money, interest rates. All right, the money supply. Is it a downward sloping curve or an upward sloping curve? Ha ha ha! Carlito is like, oh, square vector? See, some of you guys have gone through the fundamentals course. It's vertical. Oh, what? It's vertical. The money supply is the money supply. There's that much money. That's it. And if the money supply increases, it's exactly this much now. There's no slope. It's vertical. You either have this much money, like 1 trillion, 2 trillion, 3 trillion. There's only that much. There's not sloping, right? So if you change interest rates, if the government just changes the interest rate, like let's say passes a law, doesn't affect money supply, so to speak. But money supply affects the interest rate. So we'll get there. Okay? So check this out. There's the demand for money. Aha! Demand. Oh, I didn't label my chart, sorry. The demand, I got to go back. This is money supply. Okay? And the demand for money. Demand for money is downward sloping. When money is expensive to borrow, let's say 10% interest rates, or if money is 1% interest rate. Let me show you. If interest rates are 10%, the market's only going to demand a small amount of money. If interest rates are 1%, the market's going to demand a lot. Put it this way, credit cards are cheap, mortgages are cheap, car loans are cheap, right? Pawn shops are cheap. I don't know how pawn shops work, but you get my, that's why those curves are shaped that way. I just killed everything. Sorry. Oh man, come on, Wayne, do a better job. All right. So anyways, check this out. I have to do a better job than that. Come on. I just can't be that bad. I can be bad, but I can't be that bad. All right. So now let's kill this. So you get that. So I just answered why the demand curve for money demand curve, is downward sloping. All right, cool. So the Fed comes in. So what did they do last time? What was the last change in central banking policy at the Fed? What was the last one? What did they do? Raise interest rates or lower interest rates? So let me show you the mechanism on how they did this. They go into the market through an OMO. Remember, it's just a tool, an open market operation. The Fed goes into the same bond market you and I are in. Everyone's in the same bond market. Okay? And it's 10 times bigger than the stock market. So the Fed walks in, they buy a bunch of bonds. Okay? The bonds go to the Fed balance sheet, but the Fed had to pay money for the bonds. So the money they paid for the bonds goes into the economy. Okay? It goes to the bond dealer's bank account. The bank then lends that out, and then that gets spent, and then that goes in other people's bank accounts, and then that gets lent out, that gets spent, and that gets put in and it goes into the economy. And the supply of money goes up because the Fed doesn't use money that already exists. They just make a few clicks on their keyboard, and they invent the money. They don't print the money. The Treasury prints the money. They invent the money, so they buy $1 trillion worth of bonds, right? Of course, it wasn't $1 trillion. But they could print 100 billion. And because of the fractional reserve nature of the US economy, the 100 billion gets turned into 1 trillion. Okay? Rich countries like America, their central bank creates 100 billion, and then the American economy turns it into $1 trillion through productivity from the fractional reserve banking system. But anyway, so the amount of money goes from 100 billion through the 1 over R plus E, if you're following me here, 1 over R plus E, okay, right, which is 1 over 0.1, which is the same as 10. So if the Fed buys 100B, as it trickles through the real economy, it turns into 1T, 1 trillion. The Fed makes 100 billion and that in of itself, the economy creates $1 trillion. Anyway, so we go from 2 to 3 in the money supply, okay? So then the money supply goes like this. Beep, 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 beep. Now we have 3 trillion. But check it out. Interest rates went from this equilibrium point of whatever this was, 5%, okay? And now the new equilibrium is 2, I guess, whatever. Okay? So interest rates fell as the money supply went up. Okay? Is that the multiplier effect? Yes, it is. Now, in all kinds of economic models, there's multiplier effects of different types. That is the money multiplier effect. Yes. Okay? But then this impacts things like the wealth effect and a bunch of other things, right? But yes. So it's interesting, right? That's how it works. That's how it works. So all of it, everything we're studying here, the only thing that matters, let me put it to the correct template. The only thing that matters is all that data, all that economic news, in of itself is irrelevant, except for if it will impact the central bank to change its policy. And you should know how the central bank would interpret this data. And the central bank says, oh, we need to do something. When they get to that point, we have a new trend being born. Soon as the market thinks the central bank is thinking about making a policy change, game on. Because we're always in the future. Amateur traders are in the past. What happened tomorrow? Well, maybe it'll impact today. And then everyone else is 1 month, 3 months, 6 months, 12 months in advance. That's what professionals are thinking. So right now, the professionals are thinking, will the Fed cut more or are we done for 2020? That's what a professional is thinking about. And from that, they're like, oh, well, in that case, I know what I'm going to do with the dollar. So that's why I ask you, like, what's going to happen in 2020 with the US dollar? You're like, I don't know. I mean, what do you mean you don't know? If you had clients, they'd be calling you up. What's going to happen in 2020? Oh, well, I have a whole PowerPoint presentation I'd like to take you through so you understand, right? Like, you should be on top of this big time. Okay. Now, Daniel says, oh, I really need to know how to interpret that. Two ways. One, you can take the fundamentals course, but I don't think you got the money. I think you've said that before. Go and take a college course. A college course focused on macroeconomics. Or at least go through a course where you go through the syllabus, and it has at least 2 or 3 or 4 lessons on monetary policy and central banking. Okay? Now, Ali says, look at FedWatch. Well, you have to understand that before you do FedWatch stuff, because now we're looking at the pricing of bonds, right? So you need to understand the pricing of bonds and what goes into the effective pricing of bonds, right? And then from that, before you can price a bond, you probably need to know future value of money, right? You understand? Baby G says the fundamental course is probably cheaper than the college course. Well, yeah, well, now the world is great. You can do edX for practically free, or maybe even for free, right? But, like I sent out a deal yesterday. I said I'd post it. You guys could take 40 hours of Forex videos for, I think it was $700, right? I'm like, dude, one of my courses, one textbook's $350. Not the course, the textbook, right? Like, it's so small amount of money. But there are even cheaper ways. I would suggest take an entire college course, but just make sure that there's in that course, like if you do microeconomics, they're not going to talk about time value of money, pricing of bonds, a monetary policy of a central bank. They're not going to do that. That's macroeconomics. But you might do like principles of economics, and they'll do some micro and they'll do some macro. So you might want to start with the principles level stuff, where they teach you all this. Now, I'm thinking in the future, I'd like to create an entire, maybe a whole, I have an economics degree, right? So I was thinking, like, what if I took you through my entire coursework of my economics degree, right? Like, let's start with the principles level class, and then I could teach you some micro. I don't really like micro, but there's some interesting things about micro, like things like specialization and how this impacts things, especially when we live in a world of socialism. If you just do economic models, it doesn't work. But of course, most economic models are flawed anyways, right? So whatever. But you can see, like, if 2 countries or 2 companies make radios and bicycles, let's say, they're both better off if one specializes in bicycles and the other one specializes in radios. They'll make more money if they specialize. And you should be able to, like, comprehend those types of models. And then we go into some macro level stuff and, and all that kind of stuff. But you could just skip it. Like, you could just do the fundamentals course at FX Bootcamp. And I think by the 4th hour, you're managing the balance sheet of a commercial bank, which then leads you to understanding how central banks can get involved and why the importance of banking, as well as the importance of central banking, impact an economy. So then you could lead into, well, what is a central bank? What does a central bank do? Even Ben Bernanke comes in and teaches one of the lessons, right? So I'm like, you could start there, but if you don't have $700, then I get it. You need to grassroots stuff. Go to edX and take a legitimate, serious economics class. Probably take 2 or 3. Do principles, do micro, then do macro. And then the intermediate stuff's really difficult. I don't know if you'd want to do it, but one of the things you could do is after you do all of that, I know the IMF does a course. I think I did part of it a long time ago. It had to do with modeling through GDP. But anyways, IMF stuff, you could start doing the fuzzy logic of IMF math, but whatever. Max is bringing up Milton Friedman. That would be in our book club, by the way. We would read Milton Friedman. I have a couple of his books. But here's the thing. Milton Friedman is still in the minds of older Americans, right? People a little bit older than me. So like my wealth manager, for example, okay? He's 60 or something, okay? He buys stocks and mutual funds for me, whatever. But someone that age or older still has Milton Friedman in their mind. And you ask them, hey, what do you think about the Fed? Oh, the Fed is bad. The Fed does manipulate. The Fed is, yeah, you get rid of the Fed. The Fed is a scam. The Fed, right? And they just spew all that out, right? And then you're like, oh, what do you think about the U.S. government? Oh, the government's too big, and the government is bad. The government is bad. You get rid of the government. No government. Like, oh wow, yeah, cool. But I'm not joking. It's like it's straight up like the same stuff. But that's Milton Friedman, and the reason for that is Milton Friedman came out in, I guess it was the 50s, post a different thinking in economics, right? So who was before Milton Friedman in the thinking? Who was in the minds of even economists wasn't even really a thing back then. Can you imagine, like, banks didn't even have economists working for them before Friedman, right? Who's before Friedman, guys? If you were to study, come on. JMK, Max has got it. Keynes. Oh, Alex Austrian, Hayek. Wow, okay. You only read Hayek to set up Keynes, or you read Keynes and then you counter him with Hayek, right? Or von Hayek. But anyways, you can skip Hayek, I think. But if you really want to put things together, I mean, how could you? I mean, that's the, how could you do Joker and not talk about Batman? I don't know. I guess it can be done. So anyways, one's the Joker, one's Batman, right? But anyway, so Maynard Keynes, the Keynesian school of economics, was the big thing during World War II and after World War II. And then it went a little too far, right? So Milton Friedman's thought came in and like, oh, the government ruins everything and you should just leave businesses alone. They're going to take care of themselves. And a business that can't serve its customers with value will go out of business, and so just let it go out of business, and the government doesn't need to be involved and all that kind of stuff. But all the way through now, we know that doesn't quite work out either. And now we're doing this kind of weird swing it back into socialism, but that's stupid. Okay, so we need to adjust Milton Friedman, right? And there's a new school of thought that's coming out, and we cover this a lot in Harvard, where serving the community gives more value and more value creation, not just to the customer or to your employees and your stakeholders, but society in general, leads to more economic activity and all that kind of stuff. Yeah, I think that's going in the right direction, and there are people are pushing that model. I don't think that's quite 100%. I think that's very millennial, where you're supposed to stroke your big, fat, bushy beard with grease in it, and you say, yeah, if I only serve all of society, my company is going to be better off. I don't 100% believe that, but maybe because I'm older. But I do know that businesses need to focus, right? Even when I worked for nonprofits and stuff, I'd walk into a nonprofit, I'm like, what's your mission? And they're like, well, we're not going to help people with cancer, right? Like they would have these vague notions of their mission. And then you say, well, how are you serving your mission? Well, we do this and this, but we also help with recycling, we help with the environment, and we help with this. And we're like, whoa. Focus, dude, focus, right? And so right now, I think society, and if you're in college now, I don't know if it's true, maybe just at Ivy League schools or not, but the school of thought in economics is that you're supposed to serve all of society in general, and that there will be an economic benefit because of these exogenous costs, external costs are addressed, where currently they're not addressed. Things like, a company that produces chemicals that help farmers produce a higher yield, that's good, but then the external cost of that is, people are dying of cancer that you spray it, right? You're like, that's bad. And in many parts, or pollute, right? That pollutes the air, but, the chemical company doesn't pay for the air, but all of society pays for the air. So how do you address these costs? And so but my big point is society is working right now to address these things, okay, and make changes. And so really, if you spew out to a millennial Milton Friedman, you're going to get slapped out. Now, I think what will happen is then we're going to move too far towards, Nike not only should make good shoes that make you feel good or add some other value, like make you run better, make you run safer, or just make you feel better about yourself because you have a brand that makes you feel like you're a good person or they look really nice on your shoes, right? But now Nike is responsible. Well, they should be responsible for the pollution, and they should be responsible for providing a safe working environment for their employees and their contractors. But should Nike worry about gun safety? So that's a bit of a stretch, but that's kind of what's getting pushed. So I think we're going through this ebb and flow where we're about to go into another 50 years, let's say, or 30 years, maybe the cycles are faster, of a new economic thought. Because we know, for example, economics is flawed. You cannot walk in and say, here's my model, it's based on the premise that everyone's rational. And then you look around the room and you're like, dude, nobody in this room is rational. Nobody. Right? Nobody. So you're like, well, that sucks if you're building a model based on everyone's rational. Right? Like, here's a great example, and I spewed this this fact out the other day. According to Barron's. According to Barron's magazine, they did a survey, or someone did a survey and printed it in Barron's, that 60% of Americans don't have enough money to retire. Is that rational? People are not saving enough money for retirement. That's completely irrational. I bet you walk into that household and they have a big screen TV and they have a car in the driveway. And I'm like, where's all your money? Oh, we bought a big TV and a car. I'm like, dude, your TV in 1 year is going to be worthless. And in 5 years, the value of your car is going to be depreciated by 70%. There's nothing rational about that. Save for retirement. Well, then I'd have to take the bus or drive a used car. Yeah, drive a used car. Well, I like BMW. You don't deserve a BMW. Right? See what I mean? Like, most people are irrational. Everyone's irrational. Everyone's emotional. So anyway, the world needs to come and build a better model, and I think we're looking at more behavioral finance as kind of the new way to go. Okay? Jimbo says, I think the article said, funny for, like, yeah, you need I guess it's different for everyone. You should have at least $2 million in the bank when you hit 60. Yeah, Crypto Rage says, I've got a BMW, it's 20 years old. That's the perfect BMW. It's probably a very good car, actually. You got a 3 Series? They're pretty nice. Nothing on it will break. It's good. If you have a 7 Series, everything's broken. So anyways, there's lots of room to like behavioral finance and all that kind of stuff and markets. Like, we know the markets are not rational. So this is our job, guys. We need to bring rationality to our trading. Okay? The markets are irrational. So we need, our job as professional traders is to bring rationality to the markets. We do this by solidifying a clear bias so we know what to do. We know what to do tomorrow, the next day, the next month, sort of. Okay? And you're like, I'm like on Turkish lira, I'm a seller of rallies. Am I a seller of all rallies? No. When am I a seller of rallies? In downtrends. Cool. So now I know what I'm going to do the rest of the year. When I feel, or think, I should say, when I think the markets are in a bearish mode, it's game on for me. So here is a regression. I can just use that tool right there, and it gets drawn automatically. This tool is at metatraders.com in the complete toolkit. That tells me right off the bat, I have permission to sell rallies. And that's it. I'm done. I have permission to sell rallies. And on here, I have places where I would consider selling, right? Oops, I wanted this to be red. Okay, like these are areas of selling. These are areas of selling. This was an area of selling, but we didn't have the downtrend yet, okay? So now that I'm in a downtrend, I can wake up in the morning and say, I wonder if I'm going to sell Euro Lira today. Very clear, very focused. Now, Jack says sell only to sport. Depends if you're day trading, right? Weekly or month. Okay? So this is a day trade setup, but I might be doing this for the month. In fact, what is my target for Euro Lira? Does anyone actually know my target? Max, I did a video on chaos theory and fractal geometry. That's in the FX Bootcamp training courses. Okay. Crypto Rage has got it. I'm going to be short forever. I'm going to put this in my will and give it to my grandchildren. Okay? I'm never going to get out. Never. It'll have to kick me out at break even. Okay? Well, it has nothing to do with small. I'm just showing you how to, this is just a coaching account. But what I want you to do is add and add and add and add and add. Do you understand, guys? Let me explain this in a different methodology. We talked the other day, or maybe it was yesterday, maybe the day before, some of you might focus on making $100,000 a year. I asked you $100,000 a year, $100,000 a month. Okay? Okay? So let's say you're trying to do $100,000 a year. And all you have to, and the only thing you can trade is Euro, Turkish Lira. Okay? So if you invest $100 at the end of the year, you're going to pay in interest. You're going to collect more than $1,000. If you invest $1,000 at the end of the year, just in interest, I'm not talking pips. If you're able to hang on for the entire year, your $1,000 investment will pay you $10,000. If you had $10,000 in trades open for an entire year, you will have $100,000 paid to you just in interest. All those trades might be open. They might be up 1,000 pips each. So now you have to find a way to deploy $10,000 worth of your capital, but you might need, let's say, $25,000 in cash to do it because you don't want to be all in. Okay, but of the 25,000, you have 15,000 in available, right? And 10,000 deployed, which means you probably have somewhere between 10 and 100 trades open. It might take you all year. But you understand, if you get this right, you'll probably, my guess is if you had all that, you would have $200,000 in pips. And you're like, yeah, and I got $100,000 paid to you already in your bank account interest. Right? That's why I take you through these things, guys, and I show you these things. And I showed you a year ago and said you should get ready to do it. Knowing that, why would you piss around with a 25 pip euro dollar trade? And you're like, look at me, I made 25 pips on my euro dollar today. And then you shut the trade down, and tomorrow, how many trades you got open? None. What's your goal today? I want to make as much money as possible. Are you going to buy or sell? I don't even know yet. And then you're so happy. Oh my God, I made 25 pips, right? No, Jimbo, consider it not in a calendar year. Consider it 365, okay? And then, of course, break it down. Obviously, not every trade is going to be open per year, but you're earning the per year percentage, okay? So think of it that way. Don't make it over logical, Jimbo. Think of the message I'm trying to get across. Even if you're only in the trade 3 days, each day you're earning 1 over 365% of your 1,000% per year. It's annualized, paid daily, 7 days a week. So that's how I want you to think. Now, if you're a hedge fund, think of it as loaning money. That's what the message I'm trying to get across to everyone, right? Think about it. You're the financier, and you finance emerging markets, right? I want you to not say, oh, I'm a day trader. I like to scalp 20 pips here, 20 pips there. I'm just saying there's another way. I'm not saying that scalping's bad. I love scalping. You should know me. I love scalping. But I want you to think of this if you were a professional money manager. What if you started a fund and all it did was loan money to emerging markets? And you're using leverage to increase. Okay? Well, like a professional investor, like a professional fund manager, right? You could do that. And now imagine we're raising money and you hire me to sit on your board. And as a board member, one of my duties is to help you raise money. Okay? So here I am, Wayne McDonald, on your board. And you and I sit down and we have a meet with a potential client. Okay? We tell them who you are, we tell them who I am, and we go through things and then he's great. So let's go over the strategy. And we discuss the strategy here where because of the use of leverage, you're going to earn on your Euro Turkish Lira more than 1,000% a year. On other currencies like South Africa, you're only going to make 300% a year in interest, right? Your Mexican peso, you might make 500% a year interest. And then you're going to make, these emerging market plays. Now, you're going to make lots and lots of micro loans. That way, if anything goes wrong, the small losses don't hurt. And you're making these investments based on your long-term fundamental analysis of the economy. You see what I mean? So you're going to make lots and lots and lots of microloans to Turkey, to Mexico, to South Africa, so on and so forth. And each one, as soon as you can, you're going to remove the risk by moving your stops to break even. And you're just going to build a ginormous macro-focused portfolio. And when you balance it all out, some paying 1,000, some paying 300, some paying 500, you expect to earn 500% return on investments on your portfolio plus asset appreciation. And you're going to do so in a way that's hyper-focused on managing risk. And then they're like, wait, what are you doing? Say that again, because those numbers are massive. You say, okay, let me give you an example, sir. I pony up $1,000 USD out of our portfolio. Let's say it's 1,000 of your dollars. Make it real personal. Here's what I do. I go to a bank in Europe. I'm like, hey, bank, lend me some euros. And they're like, oh my God, we're so happy you're here. And you say, I want to borrow a bunch of euro. I got $1,000 USD as collateral. How much will you loan me? We'll give you $100,000 worth of euro. So that might be what, 82,000 euros or something. We'll give you 82,000 euros. And you pony up your $1,000. Okay? I'm like, cool, right on. So now I got my 82,000 euros. Oh, and by the way, Europe's giving it to me for free. Thank you, Europe. Okay? So now, Mr. Potential Client, I have $82,000 of euro, but you only putting up $1,000 of your money. Boom, great. Now we got these 83,000, whatever it is, and we go over to Turkey, and you're like, hey, Turkey, you need some euros? And they're like, oh my God, thank you for being here. See, Europe's happy. They're thanking us. Then we go to Turkey, and they're like, oh my God, we're so happy. They're thanking us too. I'm like, hey, I got some euro. You want to borrow it? Yes. Okay, good. We're going to charge you 12%. They're like, faux show. We will take that. Cool. Right on. So we give them to Turkey. Turkey pays us 12% a year. And we go back to to our European bank. We have to pay for that loan. It's basically a loan with our $1,000 collateral. The loan just is free or close to free. So we pay them nothing, basically. Meanwhile, this money keeps rolling in day after day after day. Turkey's paid us day after day after day. Yeah, we collect $1 and we pay Europe a penny. Cool. The other 99 cents we keep. Now, bear in mind, right? Bear in mind, it's more like $3 a day, right? So anyways, bear in mind, we're earning $3 a day, but you've only ponied up $1,000. So the funny thing is it's more than that, right? Because it's more than that. It's $30 a day. But anyways, I hope you see what I'm saying. Like, you can form a logical, intelligent fund strategy that you should be able to sit down and clearly articulate with customers or potential clients and explain your risk management techniques. And if you have other traders working for you, you're going to have management control. Like, what are you going to do to prevent a rogue trader blowing up your account and all that kind of stuff? Okay. And so now you explain the alpha and how you manage the risk and how you manage this and how you manage that. Okay. And now you got yourself a business. That's why I keep telling you, I want you to think differently. You don't have to do that model. I'm just saying, I want you to think bigger than log into euro dollar and hope the hell you make 22 pips today. Okay? So, thank you for being on my team, guys. I love you in my life. You're my sweet baby. Thank you for keeping me sharp. Thank you for keeping me focused. Thank you for the loyalty and respect you show me. Thank you for the feedback you leave me every day. I read your comments every day. Please, 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 please keep leaving comments. I really appreciate it. Like I said, the video a week ago or so where you left feedback whether I helped you in 2019 or not, I gave it to my mother. She read every comment. It was 19 pages of comments. And she cried. And then she told me, that's so amazing, when I was young, she thought I was gay. I'm like, what, Mom? You thought I was gay? She's like, oh, you worked all the time. You never had a steady woman in your life. You just worked and worked and worked. I'm like, oh my God, Mom, I'm not gay. She's like, well, I guess working so hard all those years, I guess has really paid off. I'm like, yep, guess so. Yeah, that's pretty true. That's a true story too. I'm like, what? You thought I was gay? She's like, look, you lived in San Francisco. You had no steady women in your life. You shopped at farmers markets, for crying out loud. And you ate salads with flowers in them. Like, red flag. Yeah. I'm like, Mom, I was trying my best. I was trying my best. Yeah, I guess it's good she didn't see the women in my life at that time. But anyway, so I found myself a fabulous, wonderful, smart, intelligent, good-looking California girl, blonde hair, blue eyes. Snapped her up as fast as I could. Cool. Anyways, guys, peace on earth. May the pips be with you. May your profits be above average. Thank you for letting me in your life. Thank you for being in my life. I will see you tomorrow for non-farm payrolls. And if you're in my swing trading group, I will see you in a half an hour, my friend. Swing trading group, swing.fxbootcamp.com. Large and in charge, live and real in half an hour. See you guys. And I'll see if I can turn this. YouTube has a different